Hello, I'm Cristina Marujos, and you're watching the Daily Market Comment at xm.com by Rafi Boyajian. Fed Chairman Jerome Powell paved the way for a rate cut yesterday at a Fed event in Chicago in his first remarks since the collapse of the U.S.-China trade talks. Powell mentioned the Fed would act as appropriate to maintain economic expansion. U.S. stocks rallied on his comments as investors interpreted this as a signal the Fed was ready to cut rates should the economic outlook continue to worsen. The Dow Jones, S&P 500, and the Nasdaq Composite all closed more than 2% higher, recovering sharply from multi-month lows. European shares also closed sharply higher yesterday, while in Asia, Chinese indices bucked the trend to close marginally lower. This suggests there's still plenty of risk aversion prevailing over markets, as there doesn't appear to be any way out from the U.S.-China trade conflict that's threatening to push major economies around the world into recession. The only positive headline to emerge in recent days was that U.S. Treasury Secretary Steven Mnuchin will be meeting with China's central bank governor at the G20 meeting of finance ministers this weekend. There was a more muted response in currency markets to Powell's remarks, with the dollar slipping to fresh lows before rebounding a little. Concerns persist about the strength of the U.S. economy, so investors will be watching today's ISM non-manufacturing PMI ahead of Friday's non-farm payrolls report. The softer dollar continues to benefit struggling European currencies, with both the euro and the pound bouncing back from recent lows. The pound's rebound has been more restrained, however, even as President Trump promised the UK a phenomenal trade deal after Brexit during his state visit to Britain. Fears of a hard Brexit are running high as most of the leading contenders to replace Theresa May as Prime Minister support a no-deal exit. The Australian dollar, along with its New Zealand cousin, continues to outperform even in the face of a slowing economy and a rate cut by the Reserve Bank of Australia. But with the U.S. Fed now also looking likely to cut rates in the near future, the Aussie and Kiwi are being supported by narrowing yield differentials. Thank you for watching the Daily Market Comment at xm.com.